another session, another technical analysis indicator, this time Bollinger Bands. Before getting right into it, I hope that you've practiced and understood everything I've told you in the previous sessions, and this session is based on the previous ones. So let's see what is it all about. If you are new to trading, or even if you are trading for a while and you are looking for something to help you out making your trades more effective, Bollinger Bands is a good place to start. In this video, I'll go over what the Bollinger Bands are and what are the different types of trading that we can make with them. But I have a secret trading strategy for you in the end of the video. Don't go anywhere, watch it until the end, you're gonna be surprised. Bollinger Bands are a technical analysis indicator developed by John Bollinger back in 1980s. They measure the volatility of the market, so it's a volatile based indicator, and it helps the traders to find some good signals for buy or long, sell or short positions. When stock's price moves outside the upper or lower Bollinger Band, it is considered overbought or oversold. This can be a sign of a potential trend reversal or continuation of the current trend. However, it's important to keep in mind that Bollinger Bands are just one tool in your trading arsenal and should always be used in conjunction with other indicators and analysis. Now let's go to the chart and see some examples. So let's first find the Bollinger Bands. It's really easy, just like the previous session, like for RSI or moving averages. We go to the indicators section and simply write down Bollinger Bands or double B. The first one here is Bollinger Bands. We can make it favorite and click on it. I highly recommend to leave it to the default setting, leave it B, so it is how it looks like. How does it really work? So in this case here, for example, you can see when the price went out of the band, it's working like RSI somehow and showing us the overbought zone, and for the bottom of the band is oversold zone. So whenever the price goes above it and then comes back in, it means that the price may reverse, which did here, and when the price is going below it, I mean below the deviation band, and then goes back inside, it goes up. One of the traditional ways to trade with it is just people used to wait for these happening and go short here with the stop loss here and wait. There are two ways. Some people come out of trade just on the mid band, or some people wait for the price to go below the mid band then enter a trade, or just they just wait for the price to go below band here and come out of the trade. But it doesn't really work always. It's a good trading strategy, but if the market is going range, when the market is going up in a trend, for example here, if you wanted to take short trades here, there will all loses. For example, short trade here, this one was a win, but in this case here, if you took a short trade here, we had to wait for the price to go back in. If you wanted to wait for the price to go below the lower band, it never happened. It just hit your stop loss here. Again, it happened here too. Another lose here. So you can lose a lot of money if you just stick to this strategy, and it can make you lose a lot of money, and you come with the idea, oh, this is not a good trading strategy, and it happened here. Later on in this video, I'm going to show you my secret weapon, how to make this strategy work, combining it with other strategies. But this is one of the methods which people use. You can use it, but you have to be aware of these facts. It can really make you lose a lot of money. So how people really use the other ways to trade and use these Bollinger Bands in their trading strategies. One of the ways was the previous way, which I told you, but it has its pros and cons. The other way, which is a really popular method, is to look for a squeeze in the bands. A squeeze occurs when the bands are close together and the stock's price is trading in a narrow range. This can be a sign of an upcoming breakout, and traders will often look for a move outside of the bands as a potential buy or sell signal. Let's go to the chart and see some examples for this one too. Concerning the squeeze trading strategy with Bollinger Bands, if you take a look at here, you can consider these deviation lines as dynamic support and resistance levels, which is causing the price to go down or go up, whatever it is. But when the price is going to squeeze, like here, if I zoom out, just like that, you can see that the price is squeezed within this area. It means that the buyers and sellers, they cannot fight each other and the market is in indecision. But whatever direction is going to break this area, the price is going to bounce off hard that direction. So we can just determine these areas with lines or areas as support and resistance levels, like here, small ones. Or another method is just you can put just a line, a horizontal line here, and you wait for the price to break it either ways, up or down. And then when the price does it with a strong candle like this one here, you can take a long trade. Put your stop loss below this lower line here, or you can just consider these shadows, but don't worry about the place of the stop loss. I will talk about this in the upcoming videos because we have to talk about that in risk management a lot, where to put this stop loss exactly here, here, or here. We will talk about that, but just for the moment, we just want to see if this trade hit our target. And there are different ways to set the target point, which I'm going to talk about later on, but some people take it for 1 to 1.5 risk to reward ratio. Some people make it on 2. Some people make it trailing a stop loss and go as high as it can go. And there are lots of ways to do that. Let's make another example on the chart. So here's with another example on the chart, and you can see that we had a squeeze here. The price was squeezed really hard in this area. So if we just could put a horizontal line here above this area, and when you want to put it here, where to put it exactly on the line or behind it, you can just go a little bit back, not a lot back, because you cannot rely on these points. You must just check the recent areas and look for some areas that the price had some reactions to it. Like here, for example, we can see some shadows, lots of hits on this area. So we just put it here, and then another line is going to be beneath it. So if I want to put it here, I look at back like here, I see, okay, lots of hits here, so I put it here. When I see the price is going beneath it, I must add something here, and that's it. The price must both go beyond the support or resistance lines and the Bollinger Bands deviation line, like here. So if it's going to just be passing one of them, not the other one, it's not considered as a valid signal. So in here, it passed both lines, both the Bollinger Band deviation, lower deviation line, and our support level. So we can just take a short trade here on this candle, put our stop loss behind this line here. Where to put it, I will talk about later on, but we can go for a trade for risk to reward ratio. I haven't talked about the risk to reward ratio, but I just want to tell you how people making these trades. So 1 to 0.5 or 1 to 2, like that. So it was like 2.21, almost 22% of profit with 10x leverage, which is crazy good. And you can just keep these trades like this, and in lower time frames you can see lots of these signals, but I myself found them mostly efficient in 15 and 30 minutes time frame. Now it's time for my secret weapon to tell you how does it work. In order to do that, we need to add one RSI to the chart. So how to do that? We go here, and we had it from the previous sessions. If you want to know what I'm exactly talking about from this moment on, you have to watch my previous videos, especially about support and resistance levels and relative strength index indicator, which I'm going to leave the links above here, and both you can find it even down in the description. So we need relative strength index. I don't add moving average, exponential, or any moving averages, because this mid band, as I told you before, of the Bollinger Bands is the MA20, and we can rely on that. So let's go to the setting of RSI. What I need to do is to remove the MA baseband. We don't need the moving average because we have it on chart, and remove everything about the the middle band, and we don't touch any settings here. So next thing which we need to know is determining our support and resistance levels. So if I zoom out a little bit, you can see it was a support level here and it got lost like here, and it changed to resistance level, which I talked about this previously. This is the reason that I'm telling you that you have to watch my previous videos, especially about support and resistance levels, which are mandatory for any type of trading to mastering them. So here it was a support level, then it got lost and it became a resistance level. You can see that the price cannot break it anymore. It is our resistance level here. We have to take a look at our Bollinger Bands. So one time broke it, we don't take a trade. Second time broke it, we don't take a trade, but we know that the price just is at a certain key point or key level of resistance. So we must wait for a confirmation signal to enter a trade, a short trade. How to do that? All right, we have a couple of things which is telling us that the price tends to go back down. First, we have RSI divergence, which I talked previously on in RSI session. Watch that video. Higher high in the price, but higher low in RSI. We can wait for the moment that the price goes down. And then we have one engulfing candle here. You can see if I zoom in, the green candle is within the body of the red candle. So the red candle, it's a bearish engulfing. The red candle is covering completely the body of the green candle. But we do not enter the trade yet because we need more confirmation. If you watch my previous video about moving averages, due to the fact that this is a moving average, this middle band, it means that the price is still above it and we are not allowed to take short trades yet. So we have to wait for the price a candle close beneath it. The candle closed here. If you take a look at here, you can see it's a beautiful three black crows, which I talked previously in the candlestick patterns, which you have to watch those videos, those 3-4 sessions as well. I'm going to leave the link both down in the description and above here. Now we can be pretty confident because we have lots of signals. The price went above the higher deviation, upper deviation band of the Bollinger Bands 2 times. RSI divergence. Then we had engulfing here. This is our resistance level. And then the price had a strong close below the MA20 line. And it is 3 black crows. So we can be pretty confident that it can be a successful trade. So if we took a trade here, put our stop loss here, and here we have many options. You can go for 1 to 1.5 risk to reward ratio. You can go for 1 to 2, or you can just like before, if you are familiar with the support and resistance levels, if you know that if you knew that there was a support level here, how we can know that? So we go back in the market, it was actually here. Almost 1 to 2 is at this key level, support level here, and we could just take a trade like this, and it was, oh my god, 3.61% with the 10x leverage. It was like 36% of profit in only one trade. How much money you want to make? Are you greedy or that's enough for you? Then we can mix it up with our other strategy. Okay, one squeeze here on this support level. It's a little bit lower than here. So squeeze here, we can boom, be like that. Okay, so our support level here, it broke it here, long trade here, stop loss here, and we had lots of other signals, engulfing, bullish spinning top. You can see there are lots of signals which are telling us that the price tends to go up. So if we extend our resistance level here, we go up here, and another trade, boom, like that. 3.81%. So if you only want to use Bollinger Bands, it's not really going to work out, and you're going to lose money. This is the reason that I'm telling you, maybe you can go to YouTube, or you can buy a book. You can find lots of classic trading strategies, but they are not working as for today. Maybe some couple of years from now, These methods are going to be corny. They are not going to work out. But as for today, this is one of the most efficient ways to trade on the market. And I myself, I'm using this sometimes, not mostly, but sometimes. And I will talk about that later on. But believe me, you are not ready yet to go to the market and trade for yourself. But keep it in mind, as a strong strategy, you can mix it up with support and resistance levels, with RSI divergences, and it's going to be really strong trading strategy. That's for it today. And if you have any questions, just feel free to ask me down in the comments. But practice, 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 and never get tired of practicing. Watch these videos as much as you can. Come back again, watch it again. Believe me, when you're gonna watch the market and try to practice for yourself, and whenever you come back and watch the video again, you realize that, oh my God, there is something new in it, and I didn't know that. You think you know, but you don't, because you are a rookie. If you're already trading and you're here to just solve some issues, okay, that's enough. But if you're a rookie and you're a beginner, you really need to watch these videos a lot. It is important to keep in mind, although I've told you strong strategy how to trade with Bollinger Band, but it is not a crystal ball. And you cannot only use it in isolation. Later on, when we complete all the trading indicators, of course I cannot talk about all of them, about the most popular ones, and we get to know different types of the market, the volatility of the market, how we can make some successful trades. And during the course, and especially when the course is going to be done and it's going to be finished, I'm gonna record a complete playlist, and we're gonna come up with different trading strategies, especially Bollinger Bands, coming up with vast amount of trading strategies. It is you who is gonna choose one or some of them for different types of the market and trade with them. And in the end of the day, you, me, everyone out there, we are doing a job. Doesn't matter if it is trading, freelancing, going to a simple job out there. If you're a doctor, you're a pilot, you're an astronaut, in the end of the day, we want money. And I am here to help you how to make money conservatively, continuously in the financial markets. So, did you like what I've told you? If you really like it, hit the like button, share my videos with your friends, and if you haven't subscribed to my channel, subscribe now and turn the notification bell on so you're gonna be the one to be informed when I'm gonna upload a new video, which I'm doing on a daily basis. Thank you for watching. See you in the next one.